Choosing who to get your mortgage with can set you up for trouble or success. Let's break down the choice between mortgage brokers and bank lenders to help you navigate this important decision by examining their roles in the mortgage process, the range of products that they offer, and their working relationships with financial institutions, as well as the positives and negatives to help make sure that you make the best choice for your mortgage needs. In its most simplistic definition, a mortgage broker acts as an intermediary between borrowers and lenders. They do not lend money themselves, but help borrowers find the best lender for their specific needs. A bank mortgage lender is part of a financial institution that provides mortgage loans directly to the borrower. They use their own funds or funds sourced from depositors to finance the loan. They both provide personalized guidance. So let's go a little deeper into each one with the positives and the negative differences. So let's start with mortgage brokers. When we look at mortgage broker positives, they tend to have a wide range of options as brokers have access to multiple lenders offering a variety of loan products. This can provide the needed flexibility through offering different lenders, which can be especially beneficial if you have unique circumstances or needs. It also provides some convenience since brokers handle the comparison shopping and the paperwork, saving you time. Brokers often have fewer overlays, which are additional requirements or restrictions on a mortgage loan, since they don't have the same regulatory requirements that a bank would, making it sometimes easier to actually qualify, especially if you have a unique situation. So then when we look through the potential negatives, brokers tend to be more expensive as they charge fees for their services, which can add to your costs. You have limited control as a borrower, and you have to rely on the broker to negotiate those terms on your behalf with the lenders, which might not always align with your best interests. An example of this would be if the broker is influenced by the relationship with a certain lender or by a commission pay structure. And a very important difference is that mortgage brokers commonly do not have in-house processing, underwriting, or closing, meaning that your loan could have issues or delays. You could also have a varied quality of mortgage professional you'd be working with, as the experience and effectiveness of brokers can vary widely. Now that we've explored mortgage brokers, let's shift our focus to bank mortgage lenders to see how they're different. With bank mortgage lenders, you are working in a direct relationship, so the bank lender can often better streamline the process. It is often said that banks provide a more standardized experience, meaning that their processes from application to approval are uniform and predictable, which can be reassuring for many borrowers. This standardized experience includes in-house processing, underwriting, and closing, as well as a range of consolidated financial services, which allow for potential consolidation of financial products, like a checking account, a savings account, mortgages, HELOCs, and all that, all under one roof. There is a potential for cost savings as banks sometimes offer lower rates and fees compared to brokers, as you sometimes have to pay the broker fees on top of the loan itself. This typically is charged by mortgage brokers for their service. And finally, the pre-approval for a mortgage professional at a bank typically is seen as more positive to sellers, as there's more a familiarity and trust, and this will obviously help get your offer accepted. The negatives to mortgage bank lenders are that they typically only offer products which might not suit everyone's needs because they have to work within the confines of their institution's policies and offerings. Depending on the size of the bank, they may be too big to operate efficiently, meaning even though they have the in-house support, it is often disconnected and inefficient. With that, you might not receive the same level of personal attention that you might with a broker because of this disconnection. Banks often have more stringent qualification criteria, meaning that it could actually be harder to qualify with their overlays from the bank. Now, if you're considering a mortgage, I would encourage you to explore both options, consult with professionals, compare offers, and choose the path that best aligns with your financial goals. Ultimately, partner with a professional that prioritizes your needs, offers accessible support, imparts value and knowledge, and delivers exceptional service. So check out those Google reviews. Remember, the ideal choice is personal and varies for each individual. A well-informed decision can secure not just a favorable deal, but also peace of mind throughout your home buying journey.